I've got an important update on AI and the Fed that I'm going to share with you guys, as well as touch on the SPY, some important technicals there, the SQs, and crypto. There's a micro technical class in this video, and so if you're trying to grow your technical knowledge, this is the video for you guys. This is the Stocks with Josh show. Thanks for the likes and the new subscribers. Yesterday, 400 new people joined our community. I want to thank you guys. Watch out for the scammers that are impersonating me in the comments, as well as over on Instagram and Facebook. If any of you guys ever get DM'd from me asking for money or giving you an investment opportunity, it isn't me. All right, we've got some interesting Fed news today that needs to be interpreted. A couple state Fed governors came out and they've confirmed that there was a likely pause coming to rate hikes in the month of June, citing the need for more time to assess the economic outlook. Basically, they think the rate hikes are working because inflation and employment seem to have cooled. This should have been good news, but the market sold off today based on the JOLTS report that came in and showed that vacancies at employers surged unexpectedly to 10 million. This means that we have a red-hot labor market still. This caused the speculation that the Fed would pause for June, but that we could easily get another rate hike in July, and the markets took the position that we were back to the narrative of a hard landing scenario. The S&P 500 heat map turned blood red today, giving us a small pop to the SQ trade. Now, I'm still in my SQ trade. I bought more at $22, which I told you I would do. I increased the amount that I bought at 22, which differed from the amount that I'd bought at other levels. The plan that I've communicated to you guys on the SQs has not changed, but I will admit the SQ trade has become tricky and it is underwater. If we got a close below $22, that would confirm to us a further breakdown to $17. That's an important level of support, 22 bucks. Now that's the bear case. The bull case is if the markets digest some of the recent big moves, which we're beginning to see in companies like Nvidia, the SQQQ could easily go up in the next 2 weeks to $30. So I'm watching 22 for a risk of a break to 17. I have a hard stop loss in at $21.80. And if you guys remember, I had previously wanted to put a stop loss in at $27, but changed my mind and I should have trusted my own technicals. Right now, I'm gonna hold that stop loss at $21.80 and digest a loss if it happens. I'm hoping that $22 holds, and I'm hoping that we get a move up to 30 bucks in the first couple weeks of June, which I think is very possible, especially with the debt ceiling news that we got ahead of us. I know some of you guys went in heavy on the SQ trade and you're sweating it right now. There is a danger for some of you guys to overtrade, buy too high, sell at the bottom, and then watch it go up. That would be devastating for you to see. All I can do is tell you what I'm doing with the trade right now and keep you updated and give you support and resistance. But I would caution you about over trading right now. All right, let's talk about the SPY and the SPX. I think there's big support at 415 and 4150 respectively on the SPX. I want to point out this bullish double bottom that we got on the SPY at 403. So what is a double bottom pattern? Well, the double bottom pattern looks like the letter W. The bottom of the W consists of two touches on a price range that holds as support. The double bottom pattern potentially signals a reversal and the beginning of an upward move. What I like about this pattern here on the SPY is that it gives us two price points to watch. The price at the center of the W, which in this case is 415, and then the 403 price. Neither of those price points should be broken if this is a confirmed bullish pattern. If they did get broken, it would probably confirm a breakdown coming on the SPY. So I'm watching 415 to hold, and if it were to break, I would begin to turn bearish, and my second confirmation of a bigger bearish move would be a break of 403. In addition, within the last 2 weeks, 15 billion of dark pool orders came in on the S&P 500 with massive accumulation at the key level of 415. So I think that's going to serve as a hard support zone for now. If it did break down, it would signal more breakdown to come. This tight price compression will lead to an explosive move either up or down. And with the debt ceiling crisis yet to be finalized, both moves are on the table right now. Let's go to crypto for a moment. Crypto, a sea of of red today, but I've got a prediction. June, I think, is going to be a good month for crypto. Bitcoin is likely to hit 26,800. And if we bounce there, then I think we're going to shoot up right away to 30K. You can put your stop loss in at 26,600, and I think that might be a good prediction. Okay, before I get into the AI update, today is the last day to get up to 20 free stocks by opening and funding an account with the moomoo investment app. Moomoo, in my view, has got great research and news tools, but the best thing they've got is the community that I host on the app, a chat group called Stock Josh Fam. Get your free stocks. Come find me on the moomoo app. Quick update on C3 AI, which saw massive profit taking today on the run up that we got yesterday. It's sitting on a support level slightly above 38, which I think is critical. I'm expecting more volatility out of this stock. If 38 breaks, I think it's going to fall back to 36.40. But if 38 breaks again, the likelihood of an immediate move up to 50 has decreased significantly. Yesterday's move up to $44 was a 340% increase so far this year. So if you didn't take profits, in my view, you are a stock trading lunatic. But the interesting AI news story that I wanted to discuss with you guys today was a report that came out, and it showed that retail is not participating in the AI stock boom. Now I want you guys to check this out. AI investing. Average investors aren't buying into the hype yet. The report by Vanda Research shows that even though AI stocks have soared, retail investors simply haven't jumped on board. I think what's going on here is that retail is still digesting the narrative that the markets were going to crash with the mother of all bubbles coming. They braced themselves, they got geared up for a bearish move, and then all of a sudden everybody said, psych, everything's going to the moon because of artificial intelligence. This report went on to say that Vanda's in-house equity position showed retail remains on the sidelines. They went on in the report to compare it to the meme stock frenzy surrounding GameStop and AMC. Well, that is no surprise. Most retail was late to that party as well, and they got burned. So it's like fool me once, shame on you, fool me twice, shame on me. The report pointed out that the only stock that retail has taken interest in so far has been C3 AI. It went on to compare C3 AI to AI's version of GameStop. Now, I found that very interesting, and I see that as an opportunity. It tells me that C3 AI play isn't over because retail's got their teeth into it. Nobody can pump a stock up irrationally better than the retail investor. So I'm going to be covering C3 AI, and I'm going to be riding the volatility on that stock. I am, though, also going to balance that with a less risky way to play the AI craze from a long-term investment portfolio perspective for the more conservative investor. I'm going to do a video on that soon. Overall, my takeaway from this report is that AI is still early. It's so early, retail hasn't gotten on board, which means that there's opportunity out there for all of us right now in AI. That's it for today. I'm also going to update very soon BABA and VFC. Both are facing bearish news events, which I think will ultimately serve to provide better price entries for a longer horizon bull run. Thanks for hitting the like today. Thanks for hitting that subscribe. Go ahead and say hi in the comments. Peace and blessings, my friends. We'll see you in the next video.